everybody. Welcome back. Yes, today is Friday. Yes, I normally do this on Saturday, but because everybody's going to be, well, most of the time rolling out of town, having a great time out in the weather, we thought, well, it would be better to get this out today because some of you that are going to be looking at homes over the weekend are, well, pondering, I should say, should we look at homes over the weekend? Because holy smokes, interest rates, yep, they hit 7%, just like we predicted. Actually, it's like 7.14, 7.12. And yes, we're going to see those hedge up a little bit. We're going to come down a little bit. Going to talk about the current market, what's going on, where are we seeing some softening, why are we seeing softening, and going over what you should be looking at in brief when we talk about mortgage rates. And more importantly, look, you need to watch the video of 5 questions to ask when getting quoted mortgage rates. And yes, many of you have said, hey, can you make an updated one to that? Yes, I absolutely can. Make it a little bit fancier. We'll do that. The key is to make sure that it's the information that you understand as you are getting quoted rate. And we'll go over that a little bit later. In the meantime, make sure that you subscribe, share, and like our channel. And hey, listen, there's no selling here. It's just good, solid information. Share the information, subscribe so that you're alerted when these come up. The key thing is, it's the algorithm that tells YouTube to share this with other people like yourself. Anyway, please make sure you do so. Would absolutely love it. No, there's no commercials. We keep this super clean, and hopefully we'll keep this a little bit shorter today. So moving on, when we take a look at really what's going on in the market. So look at this. You have 905 new homes that came on the average of the last 7 days, single family only. When we take a look at 400 reduced prices, that's a significant number we're going to talk about. 1,510 pended, 942 sold. So here's what's super interesting. Note that other than last week, Friday, since the middle of October, we've always seen more pended homes or homes going into a pended status each and every week than we have seen go on market as new homes. And then, of course, we do see the solds naturally that follow and trail behind them. Yes, we do have some homes that come back on market, which are a great value for a lot of buyers out there to consider. Here's the thing. Note that we have 400 reduced sales. Now, part of this is because in the last 5-6 weeks, we've seen a downward trend of mortgage rates. In fact, we got down into the 6.12, popped into the 5s briefly, came back up again, and then with some of the craziness that's going on with the administration and other things that are going on has made things kind of a little wonky and volatile, and mortgage rates, unfortunately, have been kind of bearing the brunt for that. And so now we've hit that 7.12, 7.14, depending on what kind of loan and how much you're putting down. And that has created a wee bit of a problem for some of the buyers. So buyers have been pulling back the last couple of weeks. Mortgage applications, like new applicants, have been coming in a downward trend the last 2 weeks as we have seen these rates crest closer and closer and closer to 7%. Now, there's a number of folks out there saying, okay, I'm not so concerned about that. We know we're going to do a refinance when the rates drop down, either in Q4 when we start to see that potential recession. Recession means that we will historically see lower mortgage rates. Lower mortgage rates bring out more buyers. We still have a pent-up buyer demand. Hey, that is painfully obvious looking at 1,510 pending sales, more than what's coming on market. However, super important to understand. Listen, we've got the vacation trifecta, and so some of these numbers are going to start to change. Why? Well, just like this weekend, people are gone. They're going on vacation. That is not the thing. In a couple of weeks or over the next 10 to 15 days, students are getting out of school. And even if you don't have a student that is getting out of school, you are thinking about and doing other things. Totally normal, right? Then we have July 4th. Again, another great long weekend. Then we have about a month and a half of aggressive activity as people try and secure their home between post July 4th weekend to about the middle of August. Then we have Labor Day. That is another 3-day weekend. Last vacation, it's kind of the big hoorah, right? And people, mindsets are elsewhere. And then you also have last vacations, things like that. And then, of course, kids getting back into school. There's a lot that happens in that window of time, and focus is not on real estate. So for sellers, you need to be super mindful because price, well, hear me out, price is your first impression. And if your price too high, do not think, I'll just come down on my price. No, they won't do it. Buyers will let you sit on the market until you start bringing it down to where they feel a good value is. Remember, last week we talked about if your home sells in the first 7 days, you get between 100 and 107% of list price. If you miss that mark, you got to 20 days, you're only going to look at 98, 96% of list price. If you miss that mark and you go out to 40 days, you're only looking at really 92, maybe 93% of list price. So the more time on market is taking money out of your back pocket. So keep that in mind as you guys are considering price. Look at this. There's 400 folks that had a false start. That's truly unfortunate. It is what it is. Don't be one of those people. Buyers are super smart. They're super educated. They know what a good value is. And homes that are seeing good values are still seeing multiple offers, despite the fact we've had increasing interest rates. Keep that in mind. All right, moving on. Okay, let's see here. We have our chart just kind of showing you a little bit of the trend. This is going to be super important. So look at this. So our inventory year over year on the right-hand side highlighted, our inventory is down 30%. Now that doesn't seem like a whole lot, but really at the end of the day, that's like 13,000 homes. And that's a super big number. Our inventory is absolutely struggling. In fact, even though you can see there that we've got basically a shade over 2% more homes available today than we did this time last year. Remember, this is also when the inventory started really climbing last year up into the 11,000, 12,000, 13,000 homes. Now, don't get me wrong. We are still suffering for inventory. We have 1 month of inventory right now. We should have really 10,000, 12,000 more homes. We should be between 18,000 and 22,000 homes on the market today for a balanced market. Now, naturally, if we had that, home prices would probably come down significantly. And because we would have so much more. But because we have such few homes available, well, that's why we're seeing a lot of price stability still in a lot of areas, because there just isn't anything out there. When we take a look at this chart, we blow that up for you, not in the literal sense. This is new construction. Now, normally new construction, it runs at about 10% of the overall inventory, but we're at like 32% of overall inventory. And as you can see, the pended, the middle column on the bottom there, the pended the same month, year over year, we're up 91%. Even the year to date, year over year, we're up 27.2% based on what is available. And that's absolutely awesome. Why? Because even though there are builders out there that are still offering incentives, even though with the last couple of weeks with interest rates going up and up and up, there are builders that are still offering some really great incentives. Reach out to the real estate agent that you're working with. Ask them, what incentives are out there. If they don't know how to ask that right question, you might want to look for something else, or somebody who deals with new construction more proactively, because there are ways for you to not only get the incentive that they're offering, but more, okay? Especially in the last 2 weeks. Now, a month ago, that wasn't the case. Interest rates were a lot lower and builders were pulling back. Interest rates have been going up to 7%. They've been offering more incentives. So just understand, they have to move that product, and that is going to be super valuable for you guys. When we go and we take a look at our next chart here, this is actually bank owned. REOs right here. And simple enough, you look at that and somebody said, oh my gosh, George, I heard that, REOs were up, 85% year over year. That does crack me up. But it's such a tiny little number. And again, if you have a 1 and you add 1 to it, that is 100% increase. Anyway, small number, right? So keep this in mind that all things considered, keep it in perspective. Super low numbers. These are super low numbers. And this is, Northwest MLS. This is half of Washington State. Even when we talk about 7,000 homes, that is half of Washington State. That is like peanuts. That's not, we're not talking about your city. We're not talking about, the East Side or Seattle or King County. We're talking about, a large area. So keep that in mind as you're taking a look at these numbers as far as keeping them in perspective. Now, look at this. Here we see that not only the 30-year, but the 15-year is actually up. These are mortgage-backed securities and whatnot. And as you can see that they have gone up a little bit. The jumbos and the arms pretty much, kind of staying on the neutral, the neutral side of things. Again, remember, stocks are publicly traded. The feds have nothing to do with it, all right? Yes, the feds can affect mortgage rates, but you need to watch your 10-year treasury. If you really want to find out what's kind of going on, watch the 2-year and the 10-year. The closer they get, the more dangerous that is. We like them far apart. But with that, take a look at your bonds and your mortgage-backed securities. That's what tells you. And here's one of these charts. If you are interested in where this is from, let me know. I'll send it to you. This way you guys can monitor it also. You're, if you like a lot of metrics, yeah, fine. It is interesting to watch. Yes, the rates you get quoted in the morning can be completely different than the rates you get quoted 2 hours later or in the afternoon or evening. Yes, that is absolutely correct. So when you're comparing different lenders, make sure it's on the same day at the same time. Do not look at one in the morning and one in the afternoon. It's irrelevant because just like stocks, it's all over the place, all right? And that's why that chart looks the way it does. All right, so when we take a look at our next chart, let me blow this up. This is super important. This is a snapshot, as you can see, of May 26th. But look at this. On the left-hand side, you look at that and you go, wow, George just said rates were at, holy smokes, like 7.1, 7.14, and this guy's offering at, 6.059. That's like awesome. Yes, but understand you have to look on the right-hand side where I have the big arrow. For you to get that costs you $12,000. Now, if you go down to the bottom and you can see, and you're like, George, look at that rate. That's like almost 7.5%. Oh, no, that's like almost what we call par pricing. And notice that the fees on that one are like less than half, okay? So when you're getting quoted rate, there are 5 things that you need to know. One of them is going to be, what is the cost of that note? The next one is, if you look at most of these are 25. Oh, no, that was a different one. Every one of the quotes that they offered, you had to put 25% down. Well, not everybody has 25% down. Oh, by the way, you had to have a credit score more than, 740. Okay, I qualify for, more than 740 for a credit score. And okay, I can put 25% down because the maximum loan amount that they allowed was $600,000. Oh, that's not very exciting. So that tells you that that's a super tight box. And if you don't qualify for that box, you don't qualify for that loan, which means then the incentive, right, is that their marketing worked and you contacted them. And now they're rolling you through what other products that they have to get you to sign up with them. Watch the video, 5 questions to ask when getting quoted rate, because I guarantee you, like almost every single one of our clients, they look at that and they go, oh, I didn't know that. Oh, that's pretty exciting because now you get to learn other things. And what's super important about that is then knowledge, which is power. You'll know, oh, well, they're charging this as a fee. They're charging this as a fee. Actually, here's my true rate. I can get this better rate at a better buy down over here. And it allows you to compare apples to apples. But again, remember, has to be same day, same time. Don't think that the morning and the afternoon are the same because they're not, all right? They could be better. They could be worse. So keep that in mind. And remember, smash that subscribe button. Like and share this video. Leave your comments. Make sure you continue asking questions. We get a lot of questions, and it's awesome to be able to help, and no strings attached. So if you do, make sure post something down below for us if you want. In the meantime, have an absolutely fabulous Memorial weekend. To all of the vets, please understand our hearts are all with you guys, and everybody who has served, thank you for your service. That goes with police, fire, military, Coast Guard. We thank you very much. In the meantime, I will see you on the next video. Take care.